anything that is highly fragmented or has industry kind of tailwinds, where there's predictable cash flows, and a bit of a moat. That it's instead of industry, it's almost revenue characteristics are kind of what we're seeing, and people are trying to find the pockets where there is a fragmented market with kind of those revenue characteristics that they can do a buy and build.
Welcome to yet another episode of Investment Banking Decoded, where we are discussing investment banking in deep with our banking advisories, experienced banking advisories from the North American region. Today, we are excited to be joined by Mr. Tyler Dingman. He is the Managing Director at Alliant Business Advisory Services. He specializes in advising privately held business on M&A, strategic transactions, helping business owners navigate complex deals and maximize value. We are looking forward to hearing his perspective on today's M&A market, the deal execution, and what it takes to achieve successful outcomes. Welcome to our show, Tyler. Thanks for joining with us.
Yeah, good afternoon. Thanks for having me.
So, to start with, I would like to understand your background and how you started up being a banker.
Absolutely. So I started my career in public accounting. So I spent first 2 years out of college at Deloitte in their tax practice, primarily working on the back end of transactions for private equity funds. So quickly kind of realized that I did not want to stay on that side of it and wanted to be a little bit closer to the action. So started looking on how I could get into investment banking and interviewing. So I've spent about the last decade in investment banking. I started at a traditional boutique investment bank based in Atlanta, and I've been at Align about 2 years now. So I started my career doing a mix of sell side and buy side transactions for publicly and privately traded companies, between private equity, family founder led, and publicly traded Fortune kind of 500. Now at Align, focus exclusively on founder and family-led businesses in the lower middle market.
That's great to know about your background. So, as the next question, I would like to understand. I'm sure that you have done a lot of deals. So, all across your career, you might have done hundreds of deals. So, I would like to understand a certain deal which is very memorable to you, and is there a particular reason for that?
Yeah, absolutely. So a recent one that's super memorable. We were working on a second gen family-owned business. It was a brother and sister team in the water treatment space, and they were great clients. But we got a great outcome at a premium valuation with the right buyer. It moved rather quickly, and it was a great outcome for kind of all parties, and the most important piece I think was it was the right fit. So we had over 30 offers on that deal, and they kind of had their pick, and the right buyer kind of rose to the top. So that was a good reminder of kind of why I do this, the right outcome for good clients with the right buyer. And it was one of those deals that makes you think they're all easy, but they're not. So that's one that sticks out.
So that is one of the specialty of a banker also, because one of a very experienced banker told me in one of the podcasts saying that I can change people's lives. So that is what is motivating me to do this day on. So very happy to know your experience also. So I would like to understand during a normal transaction, what are the top challenges you face?
Yeah, good question. I think, look, where we sit in kind of the lower middle market with founder family-led businesses, and it's a lot of times their first institutional investment. So that creates, to your point, I enjoy it because you can change people's lives, but it creates a whole host of challenges versus being upmarket where there's been institutional capital in these businesses. They've got the systems, they've got the reporting, and we work with trades businesses a lot. That if there's money in the bank, they're doing fine. That's how they kind of run their reporting. So trying to get through equality of earnings or through diligence, or explaining percentage of completion, those are a lot of the challenges that kind of we deal with day in and day out. And these are things that are second nature, because we live and breathe M&A every day, but to business owners going through this for the first time, it's not. So one, trying to explain foreign concepts to them, and then especially in the middle of a deal when they've got deal fatigue, those are things that a lot of times are very challenging.
So just a funny question in between. So what is the shortest time period you got for like closing a deal? I know that some deals goes like maybe weeks or months. So do you remember a deal which closed in the shortest time span?
The quickest I think I've ever done one is probably about 120 days from pitch, not engagement, pitch to close. So call it about 100 days from launch to closing. So.
That's great. That's great. Because usually it takes like a lot of time. A lot of parties are involved in it. Last minute the buyer may back out. So all these challenges people have told me in the podcast.
Yeah. I mean, typically we say it's about a 6-month process from kind of beginning to end.
Yes.
I've had them take 2 years to 120 days is kind of the fastest I've ever had.
Yes, that's great, Tyler. So moving on, I want to understand, like, we are already in the middle of 2026. So how is the M&A landscape in 2026, and what are we expecting for the remainder of the year and the next year also?
Yeah, absolutely. So I think interest rates have obviously had a big impact on the Fed cuts. I think upmarket sponsors still we haven't seen the influx of portfolio company exits that have been on the way for almost 2 years now. But where we sit, and we do a lot of things that are kind of could be a platform, but a lot of times are a better fit as an add-on. That's kind of where we sit in the market. That sponsors are still continuing to deploy capital there. So that part of the market has been strong, and I think will continue to stay strong as they're able to kind of do that with existing credit facilities. But I think we are kind of seeing almost like the K-shaped economy we have now. It is the strong assets are commanding premium valuations, and businesses with a little bit of hair or some challenges they're hard to get done right now. So I think the market for premium assets is still there, and even solid businesses that don't have a whole lot of downside risk, where buyers can see kind of the continued recession resistant, stable demand, and cash flow predictability. There's still a market for, but project-based businesses, customer concentration, all the things that are typically challenging, or even more so with kind of this little bit of period of uncertainty. So
in your perspective, which sector or which industry is going to see a boom in the transactions in the coming months?
Good question. I think things that touch, we've seen a lot around the data centers, but not just writing the project base. What can the AI and data center kind of boom? What's going to continue to service that on the backside? So backup power, I think we'll see a lot of, but anything that is highly fragmented or has industry kind of tailwinds, where there's predictable cash flows, and a bit of a moat, that it's instead of industry, it's almost revenue characteristics are kind of what we're seeing, and people are trying to find the pockets where there is a fragmented market with kind of those revenue characteristics that they can do a buy and build, especially in our segment of the market.
I believe predictable cash flow is the top priority over there.
Absolutely.
Yes.
That is across all of the deals we've been successful probably the last 12 to 18 months. That's the number one kind of characteristic. So.
Great. So then, like talking about AI, now everyone talks about AI. Like AI is a buzzword in the market. So I would like to understand, like, how are you implementing AI in your daily workflow at Align? So are you using any tools? Like how the AI is being used in Align Business Advisory Services?
Yeah, absolutely. So we've rolled out Claude this year, and are still working through exactly how we're going to use that in our workflows. So I think we're using it as kind of a force multiplier. So to take, it's never going to, at this point, take away kind of the judgment aspect of what we do, but being able to utilize kind of the more manual tasks. That's what we're using it for, kind of review processes, and then kind of integrating across the platforms that we use. So
this is a common answer which I hear from most of my customers, that Claude is something which everyone are using. So I just want to announce also that Tracxn have right now like MCP integration with Claude, where we are building agents also. With a single agent can give you multiple workflow. Then just as an FII, everyone are working on Claude, everyone are working on these agents. So the world is fast moving right now. So jumping on to my last question here, like what's your top piece of advice which you would like to give to someone who just started their career in banking sector?
Great question. Look, I think the finding this business is challenging, so making sure you enjoy it. But I think the biggest thing with my background, having an accounting background, I've learned is a huge benefit. So I think it's easier to teach finance and some of the valuation methodologies than it is to teach accounting, and how all of those work together. So making sure you have a strong basis there, and this can be again a challenging ups and downs and a lot of hours. So making sure this is something you're passionate about is also very important.
So I believe that the accounting background helped you a lot in understanding the technical side of it. So on top of that, hard work always pays off. Like whichever industry you're joining, like you're starting your career, hard work is something which can take you to the top of everyone. So that's it, Tyler, from our side. Thanks a lot for taking your time and sharing your valuable perspective on the M&A advisories, sharing some of the deals, sharing your thought process on how AI is being used. So it was a pleasure like having you with us. Thanks a lot for taking your time.
Thank you so much. Appreciate it.